Ellen, one country at a time, one sector at a time. This is good news, yes, but how long is it going to take to really hash out these kind of deals?
It can take a very long time to get through the specifics. And that's good because these deals can be complicated, and it gives industries enough time to really dig deep into what it might mean for trade flows for their sectors, and then the lobbying begins. And so that's why some of these can take a long time to actually be put into place, but I think this is good news.
Nandini, what's important in the last 24 hours from this agreement? The content of the agreement or the direction of travel?
Direction of travel, certainly. I think the biggest challenge for emerging markets and sort of the global growth picture in the past few years has been the stagnation of global trade, and the fact that from a country that was previously labeled in the campaign to potentially be a currency manipulator, and now you have this pretty symbolic trade deal spanning not just into natural gas, but into all sorts of these subsectors and sub-industries is quite a strong point that actually trade in the world might be now stepping in that direction, increasing going forward, especially with the largest one of the largest partners such as China.
Well, Ellen, the issue is, I'm going to hone in on LNG because I'm the commodities person, right? But we're oversupplied in the market anyway. You got Russia building a cheaper pipeline out to Asia. You have a huge amount of natural gas coming from Australia. So the probability that now we just say that we can export more to China doesn't mean we actually do. So this doesn't necessarily mean anything for the trade deficit, for GDP, does it? Or will it? Well,
it can, but again, beyond any reasonable time frame for what economists, for what market participants forecast out. You'll get immediate reaction in futures around certain commodity prices and things like that, but where the actual trade deal comes to bear is so far out in the future, depending on how long it takes to put this into place and really affect flows, that short-term trading, it's just on the news.
So, Nandini, do you wind up feeling that this is better for sentiment, but it's not like you're going to go buy a beef producer in the U.S., right?
Yeah, I'd agree. I think what we're learning from so many of the political sides of markets is that it takes time for this to actually get its implications in the market. But I think the symbolism is more important here with the Trump administration, with global trade, with relationships with China. And again, that classic question of soft and hard, I think this is certainly in the soft data camp where you're seeing a positive reaction from analysts and market participants. But again, where does this play out into the specific earnings projections for specific companies? That remains to be seen.
Ellen, we've talked about this on this program before, but what's the direction of travel here? What's the objective? The trade deficit? Why is there an objective to get that trade deficit to zero? Why does that make sense in terms of the world of economics? Make sense of that for me. Why is that an objective for the White House, and should it be?
Well, it's always been a policy objective for administrations. Getting the trade deficit down means that you're having to, you have more savings in the economy that's not flowing out of the U.S. You've got a smaller current account deficit that puts less pressure on your currency. And it's just generally the economic thought is that you shouldn't run large trade deficits or large current account deficits. So it's always been a goal. And to this administration, right, the trade deficit represents unfair practices. Right, so ideally, you wouldn't want a trade deficit because surely it means that somewhere in some sector or with some trading partner, there are unfair trade practices going on. So some of it is symbolic that if you're always striving toward getting rid of a trade deficit with another country, then you must be striving toward more fair trade practices.
Or there's some kind of comparative advantage, right? Well, that's the story.
Yeah.
They don't seem to believe in that at all.
It's not a good sensational story,
no.
Right? As it's a trade deficit. I mean, this is, David, you mentioned we thought we were going to be in a trade war with China not long ago. And so one of the symbolic data points that the administration was able to point to was our trade deficit with China.
But okay, I just wonder what the takeaway is this morning. We've got this deal between China and the United States, yet the G7 are meeting over in Bari, Italy, and they can't even agree to talk about trade anymore. So what does that mean for the future of global trade if that is the new way of doing these kind of deals?
I don't see that and become worried that we're just not going to get trade deals at all. I mean, we knew coming into this election cycle that whether it was a Hillary president or whether it was a Trump president, that we were probably going to step back from globalization for a time. So to me, I think overall this is good because it shows that we're not necessarily stepping back from globalization. We may be stepping back from bilateral trade deals to instead unilateral trade deals, but it's still trade. It's still keeping trade open.